Fed holds rates, dollar slides to two-week low, crypto impact. The Federal Reserve left its benchmark interest rate unchanged, and the US dollar responded with its steepest decline in 2 weeks, according to a July 30th post from Cointelegraph citing the decision. A softer dollar has historically been a tailwind for Bitcoin and other risk assets. This time the crypto market barely reacted. As of July 30th, 2026, Bitcoin traded at $6,472, up 0.5% on the day, but down 2.46% over the past week. Ether sat at 1,910, essentially flat at minus 0.06% over 24 hours. Solana was $73.89, BNB 575.02, and XRP 1.080s. None of the majors registered the kind of move that usually follows a clear dollar weakness signal. The dollar dropped, and crypto stayed put. The textbook reaction to a falling dollar is straightforward. Dollar-denominated assets, including crypto, tend to price higher as the currency they are measured against loses ground. That relationship held through much of the last two cycles. On this decision, it did not show up in the tape. The absence of a move is the story. When a recognized macro catalyst fires and prices do not respond, it usually means one of two things. Either the market had already priced the outcome, or conviction is thin enough that traders are unwilling to add exposure on the news. A rate hold was the widely expected result. So much of the first explanation applies. The dollar move was the surprise, and even that did not pull crypto with it. A rate hold keeps the liquidity backdrop unchanged. Holding rates steady means the cost of borrowing does not fall, and the incentive to sit in cash and short-term treasuries does not weaken. For crypto, the mechanism that matters is liquidity. Lower rates make yield-bearing dollar instruments less attractive and can push capital toward higher-risk assets. A hold keeps that dynamic frozen in place. That is the practical read here. The dollar slipping on the day is a currency market reaction to forward guidance and positioning, not a change in the policy rate itself. Until the actual rate moves or the Fed signals a cut is near, the structural pressure on risk assets stays where it was. The 7-day picture reflects that. Bitcoin is down 2.46% and Solana down 4.77% over the week, so the recent trend has been softer, not stronger. Fear reading undercuts the bullish macro script sentiment lines up with the muted price action. The Crypto Fear and Greed Index sat at 36 on July 30th, squarely in fear territory. A weaker dollar paired with a fearful market is a contradiction the bulls have to resolve. Macro conditions that should help are meeting a crowd that is not positioned to press the trade. This gap between a supportive macro signal and defensive positioning is worth watching rather than trading on. Recent flow data has shown Bitcoin whales absorbing supply while retail steps back, which fits a market where larger players accumulate into weakness and smaller participants wait for confirmation. A dollar dip alone has not been enough to flip that mood. None of this is financial advice. It is a read of the price and sentiment data available at the time of writing, and macro relationships that held in past cycles do not guarantee the same outcome now. Practical takeaways for spenders and holders. For anyone spending crypto rather than trading it, a flat market with a softening dollar is a neutral to mild positive. Purchasing power measured in dollars is steady, and a weaker dollar marginally helps holders of non-dollar assets. It does not change day-to-day mechanics. If you are parking value while the macro picture stays unresolved, dollar-pegged assets remain the low-volatility option. Cards and wallets built around stablecoin spending let you hold USDC or USDT and convert at the point of sale, which sidesteps the guessing game on Bitcoin's next move. Holders who prefer to keep control of funds during uncertain macro stretches often lean toward self-custody options rather than leaving balances with a custodial provider. For a broader look at spending tools across regions, the crypto card comparison covers current fee and reward structures. The one number to track next is the dollar itself. If the 2-week decline extends into a sustained downtrend and crypto still fails to respond, that tells you the market is trading its own supply and demand dynamics rather than following the macro playbook.